Hey, Dan Passarelli here. Well, yesterday I did a video on how to select the best strikes when it comes to long calls or long puts, and I wanted to follow up on that today. So today we're going to talk about how to choose the best strikes when it comes to vertical spreads. Take a look at this chart of WWE, that's World Wrestling Entertainment. Now, this stock has been pretty strong compared to a lot of stocks over the past 6 months. Today, and I'm shooting this video earlier in the day, just before lunchtime, Chicago lunchtime, we were just above the 50-day moving average. It's pulled back a little bit, but let's just say we think that this stock is going to make a run to the upside, but maybe not be a really super strong momentum breakout play, just getting up to around 73, 74 bucks a share. All right, so we probably wouldn't want to buy the at the money calls. I mean, maybe we could, but we could actually have a lower risk trade and a higher profit trade with the debit spread. So a debit spread is when I buy a call. In this case, we'll use the at the money, and then I sell a higher strike call. Now, why do I sell the higher strike call? I sell the higher strike call because whatever it is I collect on that call, it just makes the cost of the trade less. So like in this case, for example, I could buy they only have monthlies and the options aren't all that liquid. This is really just for example purposes, but I could buy the 70 strike calls and sell the 75 strike calls. So instead of buying the 70 strike calls for, $2.20 or wherever I can get it, I'm only paying $1.45. Well, that's the mid-market price. I'd probably pay something more like $1.55 or something like that. But I pay so much less, which means I'm risking so much less. And if the stock goes up to 75 bucks, I actually make not just a higher percentage profit, but a higher profit in dollar terms. But the trade-off is that at expiration, if the stock is above 75, I stop participating in any further profit. So like that's the reason why we would sell a call as part of this spread to turn it into a debit spread instead of just buy the outright call. So how do I time that strike? Well, I simply time it at or above resistance. If we're looking at a put, maybe XLU, the utilities, XLU, the utilities ETF, there, utilities tend to stand up pretty well even when markets are going down, but this one's really headed south with the market. So say we wanted to play a short-term move, but think that, at some point there's got to be some support, and there is some support down here, maybe around, 68 and a quarter, something like that. Maybe we think that just over the next few days, it could head down just a little bit. We'd do the exact same thing, but here we'd be doing it on the put side. We'd be buying the 69 puts and maybe selling the 68 puts. We basically cut the cost of our trade in half, and we stand to either lose 39 cents or make 61 cents. So nice little trade if we're looking for just a little bit of follow through there. Next time, we'll cover, or at least one of the next times, we'll cover how to set the short strike when it comes to credit vertical spreads. This is Dan Passarelli. Hope that helps. Trade smart.